Joining us now before the earnings call, first on CNBC, is Alcoa CEO William Oplinger. Bill, it's great to have you back on the show. Welcome.
Thanks, Morgan. How are you?
Doing great. Want to talk to you about what you saw in the quarter and how that sets you up for the rest of the year, though, especially since it looks like alumina and aluminum production both increased, but there is some noise because of trade dynamics.
So let me talk about the quarter. We did have a miss on revenue. We had some shipments that at the end of the quarter that were in transit, didn't get to customers in time to recognize them as revenue. We'll pick all those shipments up in the fourth quarter. I would characterize the quarter as pretty solid. We hit production records in a number of our facilities. The earnings was, met consensus estimates based on really tight cost control. And we executed on a number of strategic initiatives. And I don't know if you saw our gallium announcement yesterday, but that had been going on in the quarter also. And we just announced that we got a long-term power contract in Messina, New York. So while we missed revenue, I'm pretty pleased with where we got to in the quarter.
All right. Let's talk gallium, because this was big news earlier this week in this deal that was announced with Australia and also involves, to a certain extent, Japan around critical minerals for domestic use here in the U.S. You've actually come on the show and talked about the possibility and the promise of gallium alongside alumina. So what does this mean, and what does this enable from an Alcoa standpoint?
So what we announced over the last day or so is an investment in one of our facilities in Western Australia, where we will be able to extract about 10% of the world's gallium. And what that does, to put it in perspective, over 90% of the world's gallium today is extracted and processed in China. This puts Western Australia, our facility, in the middle of the supply chain that we can provide gallium to the rest of the world. And we're expecting to get that to market by the end of 2026. So it strengthens the relationship with Alcoa between the U.S. government, the Japanese government, who is a sponsor for the project, and, of course, the Australian government. So we're really excited, and we think we'll be making metal by the end of next year.
Bill, do you have an update on how much refinery capacity overall you're going to shut down and how far along you are in that process?
So at this point, John, and it's a great question, our refining capacity is in the first quartile, maybe one or two are in the second quartile of the cost curve. So I'm not seeing a need for us to shut down any refining capacity. Alumina prices have come down fairly sharply over the last 90 days. There is approximately 40% currently of the Chinese market that's underwater. Our cost position allows us to continue to run our refineries in a low price environment.